Well, Deutsche Bank announcing that it will pull out of global equity sales and trading, scale back investment banking, and slash 18,000 jobs as part of a global restructuring plan. You've been following this story, obviously, throughout the weekend. And I thought your comments earlier with Dom Chu were interesting. You sort of termed this as ripping the Band-Aid off. And
Finally.
Perhaps a little bit too late.
Yeah, finally, exactly. So 18,000 head cut from 96,000 to give it proportions. That bit's not really the surprise from what's been leaked over the last month. People were saying it could be up to 15 to 20,000 job cuts. Of that 18,000 will fall disproportionately on the investment bank. So clearly the headcount in the US is predominantly investment bank, so we'll see a lot of job cuts there. In terms of color, I hear from sources that around 80% of that will be instantaneous. Day one, out the door. A lot of people will sadly, of course, have been taken by surprise by this. 20% will be drip-fed over the coming months, depending on closing various operations. There's a 76 billion of assets going into a bad bank to be wound down. Again, that was sort of expected, and when it was leaked, this bad bank term, that scared some people, but I don't think it's really an issue. They've got an earnings issue, not a credibility issue. 7 billion euros of restructuring taken over 3 years, but importantly, no need to raise capital, they say, at all. So that, again, is a slight win relative to expectations. The big headline, as we said, equity business closed globally. People had thought if they do shut down some of equities, it would be a regional thing, not global. And that's what's really grabbed the headlines. A big change from where they'd been before.
Yeah, it strikes me that that element of it, exiting equity sales and trading globally, says something about Deutsche Bank's strategy and how much sunk cost there was over many years. I remember 1998, 99, when they bought Bankers Trust for $10 billion. Market cap of Deutsche Bank today is less than 20.
Yeah.
So there you go. And in a sense, the conventional wisdom has been proven somewhat correct, that these large European commercial banking institutions maybe weren't going to be able to do it. But it also says something about the equity sales and trading business, which globally is just not a great source of profit for the industry.
Exactly right. And I think, equities has not been profitable, particularly with MiFID coming in Europe, has made it harder still. Deutsche Bank's 2018 revenue in equity trading globally was 2.3 billion. JP Morgan 6.9, Goldman Sachs 7.6, Morgan Stanley 8.9 billion. So that gives you a snapshot of the scale already that the US guys had over the European guys, but also how big a gain is this to the US guys? Not dramatically. Obviously, it depends who takes that market share, but it probably means more to some of the European investment banks like BNP, SocGen, Credit Suisse, UBS, Barclays, if they can grab that market share than it does to the US guys. As for the Deutsche Bank strategy, they'd always been stronger, if you talk about within trading, within the macro-related products, fixed income, commodities, currencies, derivatives and rates, as opposed to in equities. So in that sense, you could start to think, okay, well, maybe this will work then. They're exiting the less profitable area that they weren't as strong in. They're keeping the more profitable area they were strong in. Also, that area supports their corporate bank, which is very profitable. So again, you can start to understand, will this work? The difficulty becomes on two levels. One, the other parts of the investment bank, M&A advisory, for example. Typically, the stronger guys are the guys that can offer a corporate full service. They now can't offer equity trading. Secondly, as to whether this is just too little too late, and they've already, lost some of the potential that this could have had if it had been 3 years ago.
Why do you think it took so long?
I think...
was it denial?
I don't think it was denial. I think they knew the problems, but they still hoped... Well, so that would be denial. They still hoped they could turn it around and still be someone for everything in all kind of circles. I think also the political issues of making job cuts, even if it's heavier in the investment bank than the retail bank, has been incredibly hard to get over the line. Just look at how the talks with Commerzbank fell away, even though there now is political will in Germany to support one of their important flag carriers, but it's just taken so long to get to that point.
Do you think Commerzbank deal can come back after all these job cuts are done?
No, because that requires 30 to 40,000 job cuts across, for it to make sense, across DB and Commerzbank together, all in domestic German retail banking jobs, which would then be framed domestically as, oh, they're doing these cuts so they can rehire investment bankers. That was, A, questionable whether it would have worked anyway, but B, politically incredibly unpalatable to be approved on the political front, and that's why that fell away. This is the alternative, and again, because there were these various alternatives for a long time, they didn't do any of them instead.
Yeah, I asked the question because, Deutsche Bank, as all of you know, has been on the sort of the top of the watch list of the banks over in Europe that have the most issues. And yet we're hearing about all these changes now, finally.
Well, yeah, but I think that that's what the share price has done in the last month. Is started to say, OK, sure, we know there is issues and toxic assets and bad bank have been thrown around in the press over the last month or so. But that's the realization that that's not really the issue, and that we're not talking about this bank.
It's not a systemic problem.
It's not a systemic problem.
Solvency issue.
It's not a solvency issue. We're not talking about it going bust.
Survivability.
It's can they get back to profitability over the long term? And just the other point, which we should say in their defence for this terrible share price performance over the last 5 years, decade, 1 year, whatever you want to say, negative interest rates in Europe. The retail bank, of course, is also not profitable. They're not doing as much surgery to that part of the business. A few of these job cuts will come to that. And they also don't have an interest rate curve to look at that makes them profitable in that part of the business anytime soon.